All right, so we're taking a deep dive into Group E today. It seems like they're making some really interesting moves in the semiconductor space.
Yeah, they're really trying to shake things up a bit. It's pretty different from how things usually go down in that market.
Yeah, for sure. I mean, projecting 90 to 100% revenue growth for the second half of 2024, that's pretty bold.
And aiming for 2.1 to 2.6 NTD for the whole year, those are some big numbers.
It makes you wonder what's driving all this growth.
Well, their big bet seems to be on semiconductors.
Yeah, you're right, going all in, especially with those rumors about orders from some really big names, TSMC and ASE.
Ah, yes, those rumors. We'll circle back to those.
Okay, sounds good.
But even without those, the fact that Group E wants to double their semiconductor equipment revenue in 2024 and 2025, I mean, wow, that is ambitious.
Doubling down 2 years in a row. That's a bold strategy.
It is. But the semiconductor market is, well, it's booming. Almost everything runs on those chips these days. Phones, cars, everything.
That's true. Everything's getting smart these days.
Yeah.
But even with a booming market, how do we know Group E is going to capitalize on it?
It's a good question. It really comes down to a few things. The success of their new equipment, actually securing those orders, and then how they navigate the Taiwanese investors.
Okay, so let's start with the equipment. This analysis gets into their EPS targets of 4 to 5 NTD. And then there's this Davis double play. I don't know if I'm using that right.
Right. So the Davis double play basically means that Group E is in a position where both their earnings and their stock valuation could really take off, especially in 2025.
Okay, so a potential win-win for Group E and their investors. What needs to happen for that to actually, work out?
TSMC's certification, specifically TSMC certifying their CMP equipment.
CMP?
Yeah, CMP, which stands for chemical mechanical planarization. It's a vital part of the chip making process.
So this CMP equipment, it's crucial for making the chips themselves. What's the connection with TSMC besides them being a potential customer?
Well, TSMC's approval would be a huge vote of confidence in Group E's technology. And then there's the fact that TSMC's 2-nanometer process is really make or break for them.
Okay, I'm going to need a quick rundown of this 2-nanometer process. What's so special about it?
So the smaller the nanometer size, the more transistors you can fit onto a chip, right?
Oh.
So more transistors means faster, more powerful, more energy efficient chips. And TSMC's 2-nanometer process is the most cutting edge.
So if they get that certification and this 2-nanometer process really takes off,
then their stock could absolutely skyrocket.
it's a big if though, right?
It is a big if. The semiconductor equipment market is, it's tough. There's a lot of competition. Group E needs to prove that their tech is, not just good, but the best.
They got to stand out.
Exactly. And then you add in the Taiwanese investors.
Oh, right.
They've always been pretty particular about how they invest in these companies.
Yeah, they're all about those dividends. Steady income, low risk. That's what they like.
Traditionally, yeah. But what's interesting is that this report hints that things might be changing a little.
Yeah, it talks about how Taiwanese investors are becoming more open to this idea of thematic ETFs for dividends.
Exactly. So instead of picking one company and hoping for a big dividend, they're investing in a whole basket of companies all in a specific sector.
Right, so they're betting on the growth of that sector as a whole. But how do they get dividends from that?
So these thematic ETFs try to capitalize on that sector growth.
Yeah.
Like, let's say you invest in an ETF that focuses on semiconductors. As those semiconductor companies grow, the ETF's value increases.
All right.
And that can mean returns through dividends or by selling later on at a higher price.
So it's a different way of looking at dividends, less about those immediate payouts and more about the long-term growth potential.
And for a company like Group E, this shift could be a big deal. It gives them some breathing room to focus on those ambitious growth plans without needing to appease investors who are just looking for short-term dividends.
Makes sense. So less pressure for immediate payouts and more focus on building for the future.
Exactly. It lets them prioritize innovation, expansion, things that are crucial in a market like semiconductors that move so fast. But of course, this all depends on them actually delivering on their projections.
Which brings us back to those rumors. It sounds like they're in the running for some really big AOI equipment orders, both from TSMC and ASE.
Yes, and those rumors, if they pan out, they could be huge for Group E. I mean, we are talking about potential orders from two of the biggest names in the game.
And not just the revenue, it's the credibility too, right?
Absolutely. If TSMC and ASE are backing them, that says a lot to other clients, to investors, to everyone, really.
So what happens if it's all just hype? What if these orders don't happen?
That is the million-dollar question. They can't afford to put all their eggs in one basket.
Right.
Even if that basket is a huge order from TSMC.
Speaking of not putting all their eggs in one basket, We haven't even touched on their collaboration with Dalian on that PCB equipment.
Yeah, that's another really interesting part of this. Their work with Dalian on the PCD equipment, it's not just a side project.
PCBs are everywhere, right?
They are everywhere, and the demand, especially for advanced PCB tech, is only going up.
Especially with all the things we need PCBs for now.
Yeah.
High-performance computing, 5G, all of that.
Exactly. So Group Yi getting in on the ground floor with Dalian, that could give them a real advantage in the long run.
But could it be too much too soon? Are they spreading themselves too thin?
It's a balancing act for sure. Diversification is important, but they also need to manage their resources carefully. And then there's the convertible bond that's maturing.
Right. What's the deal with that?
So basically, a convertible bond gives the holder the option to convert it to company shares later on. Now, when Group Yi issued the bond, it was great they got the cash they needed, but
What?
But if those bondholders decide to convert, that can dilute the value of the existing shares.
So the pie gets cut into more slices.
Exactly. And if Group Yi's growth explodes like they say it will, the dilution won't really matter. But if it doesn't go as planned, that dilution just makes things worse.
Wow. So much to consider.
Yeah.
They're walking a tightrope here.
It's a high-risk, high-reward situation. They have a lot of potential, but there are also a lot of challenges. How they navigate the next year or two will be fascinating to see.
It really seems like their future hinges on a lot of things outside their control.
Yeah.
It's a lot to think about, for sure. So much is riding on them getting it exactly right.
Absolutely. And even if they play all their cards perfectly, there are still those external factors,
The things they can't control.
Exactly. The global economy, supply chain issues, even politics. Those can all have a huge impact on a company like Group Yi.
The semiconductor industry is pretty vulnerable to those kinds of shocks, isn't it?
It really is. It's all so interconnected.
So much bigger than just one company.
Right. And that's what makes this so interesting, I think. Group Yi is kind of a microcosm of this whole world of semiconductors.
It's like their story gives us a glimpse into this much bigger picture.
Exactly. And whether you're an investor or just someone who, likes to keep up with the tech world, I think there's a lot to learn from what's happening here.
So where do we go from here? What's the takeaway?
I think the big thing is that this is a story with no ending yet, at least not for a while. Group Yi has the potential to be a major player in this space, but they also have a lot of challenges ahead of them.
They're at a crossroads.
Exactly. They need those big orders to come through, and they need to navigate the risks with that convertible bond, all while staying one step ahead in this really competitive industry.
And they've got that collaboration with Dalian, too. That's a big unknown.
Right. It could be huge for them, or it could stretch them too thin at exactly the wrong moment. Only time will tell.
It'll be interesting to see how it all plays out. For now, they've given us a lot to think about. Thanks for taking a deep dive with us today. Catch you next time.